Okay, good evening. Just a quick check. Okay, good. I think everything should be fine. So we'll get started for today's session over here. Right, so as usual, what we're gonna do is we'll look through quickly what are some of the events to take note of for the week, okay, and then we'll jump into the technical analysis portion, and then from there on, we'll have a quick Q&A as well and see if you guys have any questions. Feel free to just put it into the chat, and then we'll be able to look at them. Okay, so this week here is going to be very, very interesting. Okay, but of course, if you take a look at the screen right now based on this week's event calendar, you'll be able to see that today is essentially holiday. Okay, going into Easter weekend, we have the Monday holidays here as well. So we don't expect much movement in particular for today. Okay, going forward on Wednesday, we do have a very important piece of data coming from the US, mainly the CPI year on year. Again, this is directly related to inflation. Okay, so that's definitely going to be crucial. Okay, market is expecting inflation data to come down to 5.2. From the previous one of 6%. Okay, so any surprise definitely will give some volatility to the market, especially on the US side of things. Okay, then on Wednesday evening, 10 p.m., right, we have the Bank of Canada, right? So right now, they're expecting staying the same in terms of interest rate. So last month was the same, right, 4.5. So there's no expectation of any hike moving forward from BOC or even cutting soon. Okay, so not much of a potential surprise. I don't think that they will be hiking it already. I don't think that they will be cutting it anytime so soon as well. So we're likely gonna just see it maintain at 4.5. Okay, but I think more importantly would be definitely I would say the press conference. Okay, what is some of the forward guidance that BOC might present? Okay, the focus right now would definitely be more on moving forward, when would they start to cut rates? Okay, so any hint of that would definitely be dovish, right? Would be bearish for the Canadian side of things. Okay, so keep an eye on that on Wednesday, and then after that, going into it, okay, we do have some Australia data coming in on Thursday. Pound GDP and then the US core PPI. Not really huge market mover data. Okay, just have in mind this is some data coming in, and then on Friday to end of the week, we do have the dollar core retail sales. Okay, and you can see over here is basically negative expectation, which means that we're likely going to see a recession coming in, right? Because if the retail sales is coming in negative, means it's not improving, it's dropping, it's worsening. Okay, and of course that would have an impact in the economy as well. All right. So that's the quick one overview in terms of some of the events that's happening this week and for things that you definitely want to have in mind as you're approaching the week and then trading it. Okay. So with that said, let's jump into the technical portion of things. Okay. So first up, we do have the dollar index over here. Okay. Let me do a very quick update because just about an hour ago we do have a little bit spike in terms of the dollar. Okay, but to me, I think overall nothing much has changed. In terms of structure over here, we may see a little bit more of a upside. Okay, something like that. But as long as this structure remains as a 1, 2, 3, potentially a running flat of wave 4 here, we can still expect a little bit more downside. Okay, so we're still maintaining a bearish bias on the dollar. Okay, if you stretch it long enough in the long run, I'm bearish on the dollar, especially with the outlook that the Fed eventually would have to cut rates. It's just more of like we are trading in terms of like week to week, right? Or what we call swing trade. Okay, so while we have a understanding of a longer term from a fundamental point of view, we can of course also capitalize should the dollar actually strengthen in the near term, right? So dollar index, definitely not a sell trade right now. Okay, we didn't really get a rejection as we mentioned. We would love to see that rejection before we get involved in it. We don't have that at this moment. Definitely, this is not a buy trade either. Okay, So for now, I think we'll just probably want to be a little bit patient, okay, and see how the dollar is going to react from here, okay, because if we're going to get, as I mentioned, right, a little bit more push to the upside, but if it's slow, definitely we're still looking at this drop, okay, back towards the previous low at 100.8, okay. So that's on the dollar index. I don't think there's much to really focus on right now, okay. Maybe on Wednesday when we get that CPI data coming in, okay, maybe that will give us a little bit more clue, but for now, not the best setup that I would personally suggest, okay, which means that you probably don't want to pay too much attention on the dollar index, okay. Another one here I think is a little bit clearer is the euro dollar, okay, so most of the time it's inverse, but actually what I'm seeing over here since last week, mid last week onwards, it seems that dollar index and euro dollar doesn't really give off a very clear direct relationship. Okay, so euro dollar here we're kind of expecting a little bit more downside. I'm focusing more on the bearish bias. I would love to see the market actually break off this trend line first. That's a little bit of a correction below it, and then that would be the setup to sell it. So this may come maybe closer to Wednesday or even Thursday, so kind of put in together with the CPI data release as a potential catalyst maybe for the euro dollar to continue falling. So over here, we do get a little bit of an impulse push here. If we can have the momentum follow through for the remaining of today, a little bit more to the downside, break it, obviously. We want to see a very clear break, okay? And if we can get a pullback for the next 1 or 2 days going into CPI, then of course, that's where we're going to get our sell potential, okay? So this one here, as of now, we'll probably update this a little bit, okay? To start looking for a sell trade setup, okay, it may come maybe towards like Wednesday or Thursday, right? That will be a decent sell trade. Target over here, likely we can see all the way back to the previous low around 1.0515. Okay, and of course, this one here can even go lower because if I bring you to the higher time frame, we do have a 5 wave potentially completed, and what we're seeing over here is essentially a 1, 2, and 3, right? So if it breaks this strongly, then we can expect more downside. If let's say this just breaks it and then we can see a little bit of a rejection from there, and this would just be an ABC. Okay, either way, right now we're just looking for this first. Okay, there's no need to kind of like forecast too far into the future. But right now, if you can capitalize on this downside, I think that would be decent. Right, so euro dollar is quite clear in terms of that setup. Pound dollar is coming down a little bit impulsive, kind of tag the invalidation level from Elliott Wave point of view. Okay, so right now, we'll probably not see it as a 1, 2, 3, 4, 5 back up. It's getting a little bit more complex right now. Okay, let me just do a very quick check. We may still see a little bit more upside, okay, but in terms of the label, maybe things would have changed a little bit, right? Not so much of a 1, 2, 3, 4, 5, but overall this can still continue to push up, something like that. So the direction overall does not change. It's just a little bit on the detail side of the label, because Elliott Wave has very clear rules and criteria of how the wave count should be. So right now, this cannot be a 1, 2, 3, 4, 5, okay, because this part here, this retracement kind of come into the territory of wave 1. So we'll need to change it a little bit. But taking away that count doesn't mean the direction is invalidated, right? Over here, I think the idea is if we can get a little bit more of a push up, followed by a tiny bit of a correction, overall this is still a corrective structure and we can still look for more upside. Okay, so that's on the pound dollar side. If you ask me between the euro dollar potential sell trade and the pound dollar potential buy trade, my suggestion is you might want to pay a little bit more attention to the euro. Okay, I think that structure is neater, okay, and it's easier to identify as compared to maybe the pound, right? So pound is a little bit more of like a wild card. if you have better opportunity in setup, you probably just leave this aside, focus on the better ones. Okay. Then we have the Aussie. Okay, so Aussie over here, we might continue to see a little bit more downside. Okay, the market didn't really pull back yet. I wouldn't suggest you go and sell it here, because if you sell it here, your downside is so small compared to maybe your risk is up here, right? So if you're looking at Aussie dollar, I would still say wait for the pullback. If you can get that, then of course selling here with your stop loss above, with your target here, it makes a bit more sense. Okay. So Aussie dollar direction is definitely still down. Okay, it's just a matter of like working out that risk to reward ratio so that it makes the trade worthwhile. Okay. So Aussie dollar continue on the downside bias. If I put this in, okay, wait for the pullback, look for the downside. Dollar Canadian is coming a little bit higher over here. Overall structure is still intact, so we're looking at maybe the 382. Okay, if we can get a decent bounce from there, we can then expect more downside for Dollar Canadian. Okay, just factor in that today is Monday, plus today is holiday. So a lot of this little candle that you might see it as a pretty strong momentum candle may not be a true move in the market, right? Because Monday market, if you observe it, most of the time when it moves, is what we call a not genuine move, right? Usually that's what happens on Monday, which means you see a move up today. What can happen tomorrow is it can easily come back down. Okay, so Monday market tends to give you a little bit of that kind of nature, right? So you just want to be aware of it, and of course, plus today is holiday. Okay, so that even that factor itself is even more important. Okay, so Dollar Canadian here, one way to look for it is you can either look for a sell at the top using some fib levels over here. Of course, your invalidation is here, so that becomes a potential stop loss point, or you wait for a breakout trade. Okay, so you can actually also utilize the technique where if the market breaks, then only you get it, right? So this becomes your breakout point. Your target is definitely at the bottom, and then if you're looking for a breakout point, then your stop loss would just be that recent high. Okay, so Dollar Canadian, definitely one of the pair to keep a very close watch for the week. Okay, so for me, if I were to highlight so far, it's definitely going to be Euro Dollar, and then Dollar CAD is another one. Okay. Dollar Yen, with what is developing right now, we may see a deeper B wave here. Okay, so this is where if we update this a little bit, we are looking at somewhere around this zone. Okay, so this is becoming what we call a bigger tree wave structure. Okay, something like that, and then we'll look for a sell trade down. Okay, so depending on the time frame and the style of your trading as well, if you're more of a short-term trader, right, you can also capitalize on the potential push up here. Okay, so you can see what happened in the past, right? 1, 2, 3. So over here, if this does a little bit of a corrective pullback, you can also capture this short-term upside. If you're more of a swing trader, then you would wait for this to come up towards this zone and potentially look for a sell, because this would be a bigger move, right? So this would complete the bigger 1, 2, 3. Okay, so this is where it depends on whether you are short-term or more of a swing style. Okay, so this is what we're looking at right now. Okay, for clean up a little bit. Okay, this is what we're looking out for right now in terms of dollar yen. Okay, for me, I'm not so keen in the buy. I'm actually more interested if this comes back up. Can I look for a sell here? Okay. The reason is because fundamentally on dollar yen, I'm bearish on it for the longer run. Okay, not only from the dollar perspective, but also from the JPY side of things. Okay, from a macro and fundamental point of view, there's a good possibility that the yen may strengthen going forward. Okay, and of course, couple that with potentially Fed cutting rates later part of this year. The dollar may weaken, and then dollar yen may be a pretty nice little trade based on fundamental as well. Okay, So this week, if you're short term, you have a potential buy if this does a little bit of a corrective pullback. If you're more of a swing trade, I think this week here you price it out. You need to wait until maybe next week to see if the market comes back towards this area that we're interested to sell it. Okay. And then we have gold. So gold kind of did a little bit of a pullback, and right now it's testing the 50 and 618. You may want to be a little bit cautious in buying here. Because wave 5 can be completed with this, right? It can be a 1, 2, 3, 4, 5 and it's done. And if that's the case, then obviously over here we'll expect a deeper pullback before the bounce, right? So a 3-wave ABC before the bounce, it may come back towards this low. For me, from my perspective right now, because this little pullback looks pretty sharp, there's a good chance we may see this as a recent top, and we may see a deeper pullback coming back towards like 1949.7 or 1950 before that bounce up. Okay, so if you want to buy it, my suggestion is be a little bit patient. The market may come back down and retest that. Okay, so if I do a very quick kind of update here in terms of like the current view, okay, I would do it something like that. Okay, so we are expecting maybe a 3-wave pullback and then another upside. Okay, so if you're again shorter term trader, if you can get a decent corrective move here, you can capitalize on this drop, okay, for potential sell. But for me, I'm not so keen in selling gold again from a fundamental point of view. I'm just more interested in buying it up. So I'm more interested in this point, right? So it's same like dollar yen. Okay, we're expecting short-term upside and then the big drop. So I'm more interested in the big drop. Then in terms of gold here, short-term downside, but I'm more interested in the upside. Okay, so this two here, unless you're more of a short-term trader, this week is probably just gonna be a wait, sit and wait for swing trader, right? You just wait until maybe next week. The setup might come to you then. Crude oil. Okay, crude oil is basically doing a range since that little push up from the news that came in last weekend, okay, about OPEC cutting supply. And right now we're definitely expecting a little bit more upside. Okay, looking at how things are developing here, it seems that this pullback may be shallow. Okay, may just come back maybe towards 23.6 area, somewhere around that zone to complete wave 4, and then we can get a push back up to wave 5. Okay, so this is definitely a short-term play. Okay, for the last wave up over here, and then after that we can expect a deeper pullback before the next move. Okay, so if you're looking at crude oil, you know, if you trade it, then pay attention to it. I personally don't trade crude oil directly. I do monitor it to give me some reference point to Canadian side of things. So if crude oil goes up, Canadian has a correlation to that. It tends to strengthen, and then dollar CAD can come down, right? So I'm actually looking more on dollar CAD, but at the same time, a trade on dollar CAD would also be coming from a potential play in crude oil. Okay. S&P. So S&P over here, we're expecting a deeper pullback. Okay. This one here, I think we mentioned a little bit last week as well. As price is getting close towards this zone. We have that 3-wave completion, Fibonacci, top of the trend, top of the trend line or channel, and then we're expecting a deeper pullback before the bigger move. Okay, so short term, it thus seems to be doing that. Okay, it does seems to be doing this little move here. So if you are a shorter term trader again, okay, you can definitely capitalize on the down move, potentially back towards like 3975. If you're more of a longer term investor, then wait for this pullback. Ideally, we want, of course, to see the momentum start to slow down as it approaches some of these key levels, and then you can look for the longer term buy trade to the upside. Okay. Now, the question that some longer term investors would probably have in terms of S&P is, have we seen the absolute bottom for the near term, or are we gonna get a dip back and get into a bear market, right? Because some traders, when they look at the S&P, they start to compare it to what happened in 2008, 2009, where we have that brief rally and then the market just crashed for the second time again, right? So I mean, last year we do get a bear market. So So obviously none of us know exactly what's going to happen, right? We can't fortune tell. Okay, but looking at a technical point of view over here, okay, from a higher time frame chart like daily, there are definitely some very, very important key levels that the market really have to break through before it transit back into a bear market. Okay, and one of it is obviously the previous low over here, which was established in December last year. Sorry, that is back in 2022, right? So yeah, December last year. Okay, so my view here is from a longer term perspective, as long as the price is able to maintain somewhere around there, or it can even just come down a little bit more, but if you can see a decent bounce from here, we are in a bull market eventually, right? Putting this in a context where if the Fed were to eventually cut rate by the end of this year, that would definitely give us a bullish equity market, right? Because cutting rates, quantitative easing basically means money is cheap, money is easier, and the money would then flow into equity side of things as well, and that will push demand, and therefore prices of it will likely continue to go higher. Okay, so from all those point of view, I personally don't think that we're gonna get another huge market crash unless things change, right? Which can, depending on how the economy develop, what is the Fed policies. But based on what we know right now, unlikely we're gonna see another crash. Okay, so from that point of view, any dip would potentially be a good buy opportunity, right? As this year, right? If you can get a dip here back towards 50%, then that would be a good buy opportunity. Okay, so those are some of the major ones that we're looking at. Mainly, I think Euro and the CAD, dollar Canadian, are the two that I think, for me personally, that would be like the highlight of it. Okay, so good. Seen some questions, so I'll quickly look through them and talk a little bit about that. So first question I see is from Richmond. What suggestion already had if there's a sell trade on dollar yen retracement? Okay, so if you have a dollar yen, there are generally two ways that you can look in, right? Of course, one is you naturally would have a stop, right, somewhere above that high. So one way to do it is, of course, just cut the trade off if the price breaks this. The more advanced management technique over here is, I'll just briefly talk about it, but of course, if you are interested in this, we can go into a little bit more details in another session. Okay, but the more advanced management over here is, let me just put this in, right? So you have a sell here. Okay, naturally you would have a cut loss here, right? So that's the direct way of managing, right? You cut off that trade, you limit your downside. Now another technique you can use, as I mentioned, more advanced here, is you can actually look to put in a buy to go the opposite direction, to kind of like quote unquote hedge the sell trade. Okay, and then of course over here we can't expect this to come back up maybe around this zone, right? So 100%, if let's say you take it exactly as 100%, if you take it really pip to pip, that will be maybe about 90 pips outside. Okay, so you basically put in a buy that is equal in position of that, and then you actually have a TP of your buy around that 100%. Okay, so then what happens is you would take a small portion of a profit on your buy trade here, right? You take profit here, so you capture this profit, and then your sell trade, you basically continue to let it run without that stop, because you basically hedge it. And then when the price comes to your buy target, you enter another sell over here. Okay, and you look to capture this back down, right? So what can happen over here is this first sell trade, as the market from here comes down, you can actually close it off with maybe a little bit of a loss, a little bit of break even, by using the profits you bought it to cover it, and then you write the second sell trade down. Okay, so net, you might end off with a break even trade from the buy and sell for the initial buy and sell. Okay, so the buy you make profit, the sell you close it with a little bit of a loss. Okay, to net it off, then you write the second move down. Okay, so this is a little bit more of an advanced management technique, which you incorporate the concept of hedging. Okay, but of course this one here, Again, you need to put in a little bit more thoughts into it if you want to manage that like that. So the easier way, the more simplest way to do things is have a stop loss here, right? As usual, cut it off if it breaks it, and then wait for this here to look for a sell opportunity. Okay, yeah? So that's how you can look out for it. Okay. Christine asks, please elaborate the correlation between crude oil and Canadian. The correlation between crude oil and Canadian is actually quite straightforward. Okay. When the crude oil prices rally, meaning oil prices goes up, there's a good chance Canadian would strengthen. Okay, so they're kind of what we call a positive correlation, right? When one go up, the other goes up. Okay, and the opposite is true. If crude oil prices drop, then there's a good chance Canadian would weaken as well. Okay, yeah. Good. So I have another question here. Any idea on Euro odd and pound Kiwi on the short-term perspective, right? So very, very quick. Let's take a look at Euro odd and pound Kiwi. Let me just look at both first. Okay. Now both of it are showing sign of a little bit of an exhaustion to the upside. My suggestion here is definitely not to buy it. Okay, but if you're looking about short, for a short term, I mean you're probably asking, can you sell it, right? Definitely not buy. If you're selling it right now using this structure here for a breakout, it's a little bit more aggressive in nature. Okay, because a more conservative sell is to wait for it to push down and then does a flag, and then you look for this kind of setup to trade it, right? So this is a bit more conservative. If you're trading the counter trend setup over here, which is more of like what we call a crawl, you take the breakdown to the downside, it's definitely a little bit more aggressive. Okay, but to me, both of this chart, Euro odd and pound Kiwi, definitely not a buy. Okay, we are seeing very, very obvious divergence, lack of momentum. So buying it from here on may not be a very good idea, right? Because at any point in time, the market can do a big reversal down, okay, and you wouldn't want to be in that buy trade. Okay, so this too, definitely looking at sell setup. The question is just more of like, how aggressive are you going to execute your sell trade? Okay. Okay, one more question here I see from Tan. Is it possible for XAU USD looks like diagonal instead of a triangle? I wouldn't put it as a diagonal here. I mean, this can be a double top or a divergence with wave 3 and wave 5, which we might. Let me just do a very quick check, right? Okay, we don't really have a wave 3 and wave 5 because technically wave 3 is here, right? So we don't really have a very obvious divergence between this peak and this peak, right? So would I see this as a potential diagonal playing out? Not at this moment, okay? Not at this moment. Maybe if the market gives me more clue and it becomes more obvious, then yes. But right now, this triangle is quite obvious, right? So I would stick to the triangle. I would stick to the part where if this just comes down deeper, then this would be the wave 5, and then this will be ABC, or you can call it WXY, and then this will complete a bigger 1, and maybe this will be the 2, and then we can see more upside, right? So I tend to keep things that are clearer to me, and to me this triangle is very obvious, right? We get a very, very nice little consolidation. We get a very clear internal of an ABCDE. So I'll stick to that as a triangle primarily. Okay, yeah. Good. Okay, so I see a little bit of a question coming in as well over here. Bubar asking about Euro Yen. Very quick one on Euro Yen. I would say you probably want to avoid trading this. This is more of like a V shape on a 4-hour. I don't think that would be something I would even pay much attention this week. Okay. When do I expect Fed to stop hiking rates? I think that the Fed will probably just hike it maybe another one more time. So if you put that into the perspective of the next FOMC, by May, we'll probably see the peak of it. Okay, but as I mentioned, right, things can really change very quickly. But from the current projection of what we know, I think the Fed is just probably going to hike it one more time, and then that's it. Okay. Okay. Another question I see over here. I observed that most of your price projection after Elliott Wave 1, 2, 3, 4, 5 are projected to retest at 0.5 again. Why is that? Can Elliott Wave be 1, 2, 3, 4, 5 without ABC and continue to the next cycle? Unlikely. I mean, even without the labeling, right? You would realize that the market would never move off in one direction all the time. It always does a pullback. It always does some form of a reversal. Okay. So case in point, right? If you take a look at this here, the market was trending up during this cycle, and then it does a pullback, right? And then right now it does another pullback of this pullback. Okay, so basically it's currently doing a big huge range environment. But you always observe that whatever the market does, like this, is a very, very strong move to the upside, but it eventually does a retracement or a pullback, right? It's kind of what we call a reset, and then it goes off again. So when it goes up, it needs to reset a little bit, right? When it comes down, it's the same thing, right? The market comes down, it needs to reset a little bit before it continue. That's how the entire market works, okay? But of course, every financial asset, like FX has its own nature, stocks has its own nature, but every asset doesn't move off in one direction all the time, okay? It will always does a little bit of a reset, that's what we call it, okay? So Elliott Wave is just a principle, it's just a framework to help us understand where would it likely pull back, right? Where would the cycle likely ends? It's just a study of a framework to guide us in the study of the nature of the market. Okay. So does it always have to be 1, 2, 3, 4, 5 and then followed by ABC? The answer is no, right? It can be more complex to that. But if you go back to the very, very fundamentals of how the market moves, you do observe that it's always pulling back, going off, does a very strong move to a certain direction, and then it does a reset, and then it continues off, and then does a reset, right? So that's where the nature of the market is like that, okay? And we use a technique called Elliott Wave to study that nature, right? Good. So last question I see over here is that the Euro odd you explained, I think Euro CAD is ideal for selling. Yeah, so Euro CAD may be a little bit more ideal as compared to Euro odd if you're looking at this. I think this one here, we mentioned it last week as well, okay? But I think right now, Monday, you don't want to jump in because I think this may still develop into something like that, right? For me, I'm quite clear in the trade setup that I want to see, right? I always like to see a three-wave move. Okay, so something like that is what I call a three-wave move. So I'll be a little bit patient, right? I might miss some trade, but I'll be a little bit patient to wait for a three-wave obvious structure before I take the sell down. Okay, so that's one thing that you guys may want to also look into as well. I mean, for Richmond as well, right, in terms of like dollar yen. Okay, so you can see as the market pulls up here, we don't really see a very clear tree wave, right? And that's something that you may also help to filter out certain trades like that. Of course, you may miss out trade. Don't go for perfection in the market. The idea is find a balance point that fits you, right? Like for me, if this does a tree wave like that, this would be ideal to sell. And when the market does a tree wave, it usually takes time, right? Basically, what you are doing is you're giving the market more time, you're allowing the market time to develop as a correction, to have the time to prove to you that it wants to develop as a correction before you can't commit to that trade, okay? But again, as I mentioned, sometimes it just goes one like that and then it drops, right? So you just need to find a balance point that fits for you, Okay, for me, I always like to wait for an obvious tree wave. Okay, but doesn't mean that if you get a tree wave like that, it's 100% gonna drop. No, it doesn't mean that, right? It's just my personal style is I prefer it something like that. Okay, yeah, so those are some of the things to look out for. Okay, good. Okay, so good. Before we end off today's session over here, just wanted to very quickly share with you an upcoming workshop that we have. So we have been conducting the weekly session here in English, right? But this coming weekend, on a Saturday, we're gonna have a Chinese workshop. We'll be discussing a little bit more into like 2023 for the second quarter, which means April, May, and June. What are some of the trading and investing opportunities to look out for? And of course, we are talking also about the banking crisis that we have observed in Q1, right? Is it a good time to be looking back into those banks that prices has been dropped significantly? Is it a good time to buy into those bank stocks? We'll be talking a little bit about that as well. Okay, so overall, this workshop will be discussing about macro analysis. We'll be talking about, in a volatile market, how you can actually ride onto it, and then sharing with you a simple technical analysis to help you time a little bit better in your entry, right? So this workshop here is going to happen on the 15th of April, which is the Saturday, right? From 3 to 6 p.m. It's an offline physical event that's happening on at Armada Hotel in PJ, right? This is based in Malaysia. Okay, so for those of you who are not in Malaysia, sadly, you might not be able to participate in this. Okay, but if you're based in PJ, you're based in KL, and you'd like to find out a little bit more about this workshop, okay, do feel free to WhatsApp to the Everything Trading team. Okay, so over here the link has been shared. You can click on the link and then you just go over to WhatsApp. It will direct you to WhatsApp, and then you'll be able to reach out to the team and then say that you are interested in this workshop, you'd like to register for it, and they will help you RSVP. Okay. If you're watching this right now on my YouTube channel, okay, the WhatsApp link is actually in the description in this video itself, right? So you just click read more. Under the description, there's actually a WhatsApp link. Right, so this is happening this coming Saturday, right? So it's just a couple of days from now. Okay, so if you're joining, do make sure to register an RSVP for your seat, right? And of course, if you have friends who are also keen, feel free to bring them along, but also register for the seat, okay? Yep, so that's really all from me for today's session over here. Okay, yep, so that's all the best for your trading this week, okay? And those that I shared with you in terms of the setups, in terms of some of the overall direction, hopefully you'll be able to give you some insights as well. Okay, yeah, that's all from me for today, right? So all the best, and we'll see you guys for next week's session. Okay, so see you. Bye bye.